I just ran the numbers on velocity banking, and what I found out is just crazy. By the end of this video, you'll know how much money you could save too. And shout out to the naysayers who said I couldn't do it. What's up, YouTube? It's your girl Rochelle, and I'm back with another video. I just want to share with you guys how it's going in our plans to pay down debt more quickly and shed a little more light on the velocity banking system that we are choosing to do to try and avoid as much interest as possible to become as debt-free as possible. But first off, if you're new to my channel, welcome. My name is Rochelle. We are a family of 3 residing on the island of Oahu, Hawaii, and we are a $10,000 a month plus income family that is working to pay down over $100,000 worth of debt. And if that's something you want to see, then definitely stick around. Just a little about us. We have been consumer debt free before. Back in January 2022, I share all of that content in previous videos. You can find it somewhere here, eye in the sky. I'm talking, we had our car paid off, our home paid off. We were completely credit card debt free. And I know what that feels like, and I'm trying to get as quickly as possible back to that. So we accrued some new debt. Since then, emergencies happened, medical debt, death in the family type situation. It's not the same types of debt that we had the first time, but we are working smarter and harder to quickly knock this debt out. And interest is not our friend. And I noticed the differences between being debt free the first time and working hard to get there versus now. And interest is definitely the key factor. So I just want to share part of the journey of what it looks like. It takes time, but I want to show you what the numbers look like. I'm going to be sharing actual numbers. Please comment below if you have any tips on how you've been able to use your HELOC or your velocity banking style to pay down debt more quickly, or even if you use the traditional way of paying down debt. We need to hear those stories in the comments, y'all. Now, I always say when people ask, oh, why are you doing things differently in terms of paying down debt? I said, well, I got into debt in the most unconventional ways. So why not get out of debt in the most unconventional way also? So I'm sick of interest and I'm over it. Let's see. Now, I'm not perfect. So please be kind, rewind. So since the month of October 2024, we have been able to pay off 11 credit cards, which we had in addition to the HELOC had accrued this debt. And now we are working on credit card number 12, which is our last high interest credit card. After that, that's credit card number 13. Our last 2 credit cards outside of that one high interest credit card are low interest credit cards that we have, from a credit union. So the interest rate is much better, but we still want to get rid of that debt as well. So we thought this is the perfect time to go ahead and start back velocity banking and making use of that HELOC to pay off this last high interest credit card as quickly as possible. Our goal is to knock out this 5-figure debt in the next 3 months or less, and I think we can do it. Okay, so first, let's dive into my little setup here. I want to show you in the easiest way possible how it made sense for me, and I hope it makes sense for you. So this is a regular banking setup. You have your money that comes in, you get paid, whoop, whoop. It hits your bank account on payday. That's how you know that you've been paid, and now it's time to pay your debt. Boo. So you send your debt payment to your debtor, and some of that balance, some of that payment goes towards the balance, but a whole lot more of that payment goes to interest. That is a regular style of banking. That's how we pay our bills. That's how we pay our debt. But let me show you what we are doing with our style of velocity banking. So make sure I'm in frame. Okay. Velocity banking our way is we have our income that comes in, we get paid, whoop, whoop, and we split it immediately into 2 categories. It will go either to our HELOC or to our checking account. Now, the reason we have a side venture, a side quest of going to the checking account is because we have found out in real time that there are certain things that we cannot pay for by credit card, We can't pay for it using the HELOC. And until we figure it out in a way that makes sense for us, we just pay for it out of our checking account. These are things like peer-to-peer payments. So like Venmos, Cash Apps, Apple Pays type situations. This is also for, say you can make a payment by credit card to pay your bill or whatever, but it comes with a fee. And I'm not going to, like, we've done the math and the fees are pretty high. So say you're paying $100 electric bill to your utility company, and they say it's free to use a checking account to pay it. But if you want to use a card with a logo on it, which is how they describe it now, then it's going to cost you 5% extra. And I am not about to pay the electric company 5% extra. Now, you will see others who may choose to do that, and that's fine. But for us right now, we're just going for what makes sense. We don't want to pay extra if we don't have to. We need every penny right now to go to debt payoff so that we can pay off this debt as quickly as possible and avoid interest. And remember, I'm going to show you just how much interest we are avoiding by doing this. Now, let's talk about what money goes to the HELOC. That money is going to cover any bills and expenses that we can use a credit card for. Because see, when we got this HELOC, this line of credit, they sent us a credit card attached to it in both of our names. So we both have one. So we can swipe that card like a regular credit card. We can, when we're out and about, we can make online purchases. We can do all the things. But if there's a credit card fee, we are using our checking account instead. Now, the other thing that HELOC can do is help to cover as quickly as possible your debt. So for us, we are using the HELOC to pay down debt more quickly because remember, we still have debt outside of the HELOC. So we're going to use that debt to pay down credit cards and the mortgage or the actual line of credit for the HELOC. Because remember, we're mortgage free in terms of the primary mortgage. And this is an investment property. I'll share a couple more details just so that you get the full picture, hopefully in one video. But that is how we velocity bank our way. Now, when you talk about velocity banking, the point of it is just to accelerate your debt payoff as quickly as possible by using the HELOC as your primary spending account. Now, basically, like we said, we're going to deposit that income, pay down debt as quickly as possible in the hopes that we're hitting the principal and avoiding new interest accruing, and we're going to use it to cover our daily expenses. Now, for us, we still use a checking account to do that for now because we are not responsible enough to use credit cards for everyday spending. And we have come to realize that we have no interest in using them. So at this time, we still use a checking account for that. Now, let's talk about tips on just how to get started. Say you are interested in doing things your way. Now remember, I'm not a financial advisor. I'm just sharing what worked for us, and you can decide what you want to do with the information. Let's talk about how to do it. I love quick and easy. First, you need to get a HELOC. And I think that that's sometimes something that is maybe the hardest thing to do. I would research and I would go into several credit unions and banks so that you can compare and really get some insight as to what you're getting yourself into. And I'll talk more about the good, the bad, and the in between. But for now, get a HELOC. Number 2, use the HELOC. Don't be like us and start using the HELOC. We had life happen, so we had to pause our debt pay down. And we literally lost a year in our drawing period of time because we had to deal with what life dealt us at that time. So I think that's the most important thing is to, if you're serious about this, to actually use it. Number 3, pay down your HELOC. It doesn't work if you constantly just keep it at 100% used. The whole point is to use it to help you. So be in control of the numbers, be in control of the money. Number 4 is to repeat and manage. That is the secret to paying down debt more quickly. When you have a lower interest rate, you are avoiding those crazy astronomical numbers, and I'm going to show them to you, remember. But the point is to repeat and manage your spending and make your budget. So it's not just one piece, it's several pieces of a puzzle coming together to form a beautiful picture. Now, let's talk about our HELOC. I get a lot of questions about this. I have a whole playlist dedicated to it. I'm going to hit the high points. We got our HELOC in 2023, January 2023, totaling $100,000. The interest rate changes month to month. Usually it sits at around anywhere between 10.5% to 11.5%. I haven't seen it go above that yet. Maybe it did and I just wasn't paying attention, but I don't check it very often because the rate is usually just so much better than all this other high interest. We have a drawing period of 20 years, meaning we can use this HELOC as much or as little as we want for the next 20 years. We have until 2043 to do that. We have an additional 20 years after that to pay it down to zero. So that means we have until 2063 to get this down to zero. Now, our goal, of course, is to pay off high interest debt as fast as possible. We're not trying to do this forever. I have been debt free, and I can tell you the first time it took us so much longer to get debt free, but it was also easier because interest rates were lower. The economy was just in a better position. It just is what it is. This time around, the interest is not friendly at all. So we got to do this as fast as possible. Now, what we aren't going to use the HELOC for is paying down low interest debt. For example, our car, which only has like a 2.5% interest rate right now. We literally spend about $50 a month on our car payment interest every month, and we are inside of the 2-year mark. So our car will be completely paid off in the next 2 years. So that is not something that we want to use the HELOC for, because remember that HELOC has an interest rate of 11% on average. Another thing we are choosing not to put on the HELOC are our last 2 credit cards. They have literally the same interest as the HELOC. So because they're credit union credit cards. So it doesn't make sense to do any type of transfers or advances for that. Now, just to show you an idea of what our payments were looking like before. So before we started using the HELOC, before we started paying down debt aggressively, we had an average minimum monthly payment total of $5,800 per month. That is for our card payment, our credit cards, anything that's debt, our mortgage back then. $5,800 a month. Just insane. But by using the HELOC in the first year, the first 12 months, we were immediately able to bring our minimum monthly payments down to $3,100 per month, thereby saving us an extra $2,669. That math is off. Wait, what is 5,800? Y'all, 5,800 minus 3,100. $2,700. Okay, I said $2,669. I was looking at the change. I took one of you guys' advice and I stopped counting coins. Like sometimes I would say $2,669.99. Just round it up to $2,700 and keep a small buffer in your bank account to always cover you. And it just makes the math so much more friendly. And I fought on it at first. I kept trying to use the exact numbers, but I get it now. I'm here with you. Okay, now let's talk about where I even got this whole velocity banking thing from, because I get comments on these types of videos about, where did you learn this? And hey, I watched this other velocity banking video and I watched this other HELOC. And so I started tapping on and searching some of these other people that you guys have been watching. And what I've learned is that there's so many different ways to do this. And so I want to let you guys know that I learned this style of velocity banking from Denzel Napoleon Rodriguez here on YouTube. His videos should have way more views, honestly. He is a great mathematician. I don't know if he identifies that way, but the math was mathing, and that's my thing. I'm a visual person. I like to see numbers. Speaking of numbers, I promised you guys some actual numbers, so let me do that. Let's talk about what our debt looked like with these 12 credit cards. Oh, okay, I just had to make sure I was still recording. So, 12 credit cards gone since October last year. That's roughly 9-10 months if my math is mathing. And I like to list them out because I don't want to forget what I've accomplished. I want to look at what we've been able to do and remember that, and remember that I need to keep that same energy because it's going to get harder. These balances were lower, so they were easier to knock out. But these next 3 credit cards that we have to pay off, are huge. And so I listed them out. There are several credit cards that were personal credit cards, and then we have businesses. So 1, 2, 3, 4 of the credit, 5 of the credit cards were attached to our businesses. So we have, again, the rental property has a credit card. My daughter's Shea Butter business has a credit card. I do Sister Locks and Micro Locks. That has a credit card. I have a budget shop that has 2 credit cards. We have completely zeroed out all of these cards. Now let's talk about how much interest we have avoided by paying these cards off earlier than anticipated. Are you ready? Go ahead and guess in the comments how much you think it is. I would love to know how much you think all 12 of these credit cards were going to make us pay them. Bet you it wasn't that number. $58,864. Absolute madness. I think if you sit down with your own personal numbers, it will anger and motivate you to start doing something. I'm not saying you have to do velocity banking. I'm just saying it's time to pay off debt more quickly. If you are in debt right now, find something that works for you. And I encourage you to watch Denzel's videos, because if you are a visual person like me, you might at first just enjoy watching his content just because of the numbers. He had that whiteboard and he is up there working the numbers, crunching the numbers, and showing you how much money you are giving away. And it also motivates me to never be in this scenario again. I'm done with that. I'm done with it. I don't care how good it is. I'm done with it. Okay, moving on. We're not playing, y'all. Let's talk about now. So I am going to share with you guys our plan for right now, because, we got to bring it full circle. We have 1, 2, 3, 4, 5 debts left to debt freedom. We have our Prime credit card. We have my husband's credit card, my credit card, the credit union cards, the car loan, and the HELOC. Now, these numbers that you're looking at right now, those are not the balances. No. Those are the interests. That's just the interest. So in the next 5 years, if we continue paying it off the regular way, we will send an extra $18,600 to those 5 sources. We can even just say those four debts over the next 5 years, just in interest. Okay? Just in interest, not even like to pay the balance down to 0. So this is why it's important to crunch the numbers. So you can see the Prime credit card, high interest, $8,600 just in interest over the next 5 years. If we were just to continue making the minimum monthly payment, you're paying them for their time. And so in the words of a famous lady, reclaim your time, reclaim your funds, reclaim your energy, reclaim your hard-earned money. Our credit cards, the balances are the same as Prime, but notice the interest is better, because Micah's credit card would only send $4,750 to interest, mine $5,250 to interest. But that's still a crazy amount of money. That's just crazy. And, the other thing to remember is, I do plan to close out all those other credit cards over time. I will only keep the business ones open just for, obvious reasons. But those other credit cards, those personal ones, literally don't need it. The only credit cards I probably will keep are these 2 credit union cards. They have no annual fees. They're simple to use. They're directly attached to my bank account. And I do need a credit card outside of the HELOC if we want to get to the style of velocity banking that we see others doing. Going to happen. We don't feel our monthly car payment now, so why even pay it any attention now? So I want you to crunch your own numbers, work the numbers in real time. Things have changed since a year ago, a month ago, a week ago. These companies are charging daily interest on us at interest rates that change like the wind. Fight back, y'all. Now the HELOC, this is my second favorite line item, is that if we can use the HELOC responsibly every month and create positive cash flow every month, we will do what we used to do when we first had the HELOC. We will not have a HELOC minimum payment every month. So we will literally have this vehicle to help us get out of debt quicker, and we won't have to pay for it, which is the goal. They just want to see and understand. I have talked to the lenders in depth about this, about like how because they ask you, how do you plan on using the HELOC? I was very honest. This is how I want to use the HELOC. They were like, we are okay with that, because they're making their money. We're still going to pay them some interest. How much is up to us? So make sure you're in the right vehicle with the right banking company. All right. That's all I can say. Now let's talk about, I want to close out with some tips, because, there's always naysayers, and naysayers, sometimes they have things, they mean well. They just say it in a mean way. And so what I'm going to do is say it in a way that hopefully you get the point. Tips. Yes. Number one is to remember that you must, I've said it at least once, I got to put it in all caps, positive cash flow. Now, what do I mean by that? I mean this in two different ways. So if you do your budget every month and your income minus your expenses equals $0 or less, $0 or a negative balance, you are not ready to do velocity banking. Two things need to occur. You need to increase your income and lower your expenses. You have to do both. That's just how it works. I don't make the rules. You have to have positive cash flow. Then in regards to their positive cash flow and the HELOC and this whole velocity banking, if you are contributing $1,000 a month to the HELOC, but you are spending $5,000 a month, that's okay to do in the debt pay down progress. You're going to see me do that every once in a while, but you should always have a positive cash flow so that you avoid that monthly payment and your HELOC balance continues to go down over time. So like I said, we still have this last prime credit card. So our balance may go up some more, but we are working hard to attack it, pay off prime, and then we want to work on getting that HELOC balance back down by the end of this year. Tip number 2, speak to someone who is financially responsible. I think that this is just my personal opinion. It's my channel, so I'm going to say what I want to say. That it doesn't mean a financial advisor. Financial advisors get paid to tell you how to be good with your money. I have spoken to plenty of financial advisors. They are very good with numbers, but they are going to probably want you to go the more traditional route in the debt payoff. So I found my circle. I found my village. Come to find out, people that I've known for years and that have been debt-free for years used an unconventional approach to get and stay debt-free. They didn't do it the traditional way. So find your village, find your people. Don't talk to people who have more debt than you. Don't talk to people who don't know their login for their bank account. Don't talk to people who don't even know what a budget is. This is serious. You need to surround yourself with people who want to do better with their money. Follow the channels that you need to follow. I might not be your vibe. That's okay. Find someone who is, to help you get and stay motivated, because this is not something that's going to happen overnight. It's going to put some years in. You can see the numbers that I'm saying, 20 years, 5 years, 10 years. This is not something that's going to happen quick. Find someone responsible to run all this by. Number 3, you need to know your HELOC terms. Know your HELOC terms. You see how I was able to just randomly write them down real quick and show them to you on camera? I have these buddies memorized. And what that means is you have to find some tools that will help you to stay on track and know what your numbers are. I made my own and it's for sale, but you can make your own. Honestly, you can go on Google, get you all the free tools you want. My website, RochelleAdamson.com, has tools like this. This is my home buying and mortgage payoff guide that I use to pay off our primary mortgage. I made a ton of payments every month. You can see HELOC. This is from the first time that I paid down the HELOC. Tracked my expenses. You need to find a way to stay educated about your HELOC so that you always know and can stay on top of everything. Now, when we talk about the good and the not so good, I have my notes. Here's the good. We're accelerating our debt payoff. We're lowering our interest expenses, okay? Interest is like a bill. It's like a hidden line item in your bills. We are increasing our cash flow management. We're tracking our expenses. If you're not tracking expenses already, this might not be for you. You might need to start by just tracking your expenses, even if it means looking at your statements every month. Every week, you need to be logging into your bank account, every day even. Do what you have to do. Now, the bad is that the interest, of course, fluctuates, right? So like I said, sometimes the interest is 10%, sometimes it's 11%, 10.5%. So it is changing. So that's the point, is that you need to always be attacking this in a quick and fast manner so that you're not as affected by that. If you're not careful, you can increase your debt. You can, transfer and justify spending and do all these things where your number just continues to go up and it's never going down. And that's a problem. That's a problem. That speaks to a greater issue that you might have to work on outside of your budget. And I had to come to terms with that, get therapy, change your circles, do all the things you need to do so that you can get good with money. It's okay. The other thing is the over leveraging and the possibility. So for us, this is a rental property, an out of state rental property that we are using this HELOC for. And, this isn't the home we live in. So if you are considering this and this is going to be the property that you call home, you really need to sit and think with that and sit and just, can you do this? Can you do this? And lastly, the complexity. Just the whole, looking at this number and working this number and doing the velocity banking and doing the crunching the numbers and paying down debt more quickly, it can get confusing. I have made so many mistakes, probably in this video. I make mistakes all the time with this, but guess what? The needle is still moving. So when you notice something that you could be doing better or easier, do it. Help yourself in this journey. So those are my tips. That is what all I have in my head. I literally just did a quick brain dump with you guys to let you guys know exactly what's in my head when I'm working these numbers and trying to become debt-free using the velocity banking HELOC method. So definitely check out Denzel's channel. Come on back here for my next video so you can see if this continues to work. And shout out to the naysayers who said I couldn't do it. I'll see y'all in the next video. Until then, you know what it is. Peace, love, and budgets.